The future of the insurance industry in 2025, growth challenges and market shifts. The global insurance industry is at a crossroads in 2025. Climate change, artificial intelligence, and new regulations are reshaping the way insurers operate. But what does this mean for you as a policyholder, investor, or industry insider? In this deep dive, we'll explore how the global insurance market is growing and who's benefiting, the biggest threats facing insurers right now, how artificial intelligence is transforming underwriting and claims processing, what new regulations mean for the industry, and at the end, we'll discuss what all these changes mean for you and how you can stay ahead. Subscribe to the Insurance Report for expert insights every week. Despite economic challenges, the insurance industry is still growing. Let's break it down by region. In the United States, the property and casualty insurance sector is expanding due to rising home values and vehicle costs. Usage-based insurance, where customers pay based on real-time driving behavior, is rapidly gaining popularity. AI-driven underwriting models are replacing traditional actuarial approaches, making risk assessment faster and more dynamic. Over in Europe, RELX has reported an 11% profit growth due to AI adoption and a resurgence in live events. Climate regulations are driving insurers to reassess risk pricing models for high-risk areas. Cyber insurance is growing as businesses face increased digital threats. Now, in the Asia-Pacific region, there's a lot happening. The area is experiencing major M&A activity, with several insurers consolidating to remain competitive. Insurtech companies like Ping An in China and Bajaj Allianz in India are pioneering AI-powered insurance products, automating both underwriting and claims. Microinsurance is expanding, covering underserved rural populations. One of the biggest threats to the insurance industry today: climate change. The 2025 Los Angeles wildfires have resulted in over $30 billion in insurance losses. Companies like AIG and Allstate are struggling with underwriting losses, which could lead to policy restrictions. Flood and storm-related claims have risen by 40% in the past 5 years, making home insurance unaffordable for some high-risk regions. How are insurers reacting? Some are pulling out of high-risk areas entirely, leaving homeowners with limited options. Others are raising premiums drastically, making home and property insurance unaffordable for some consumers. Insurers are lobbying for government-backed climate reinsurance programs to offset increasing risks. The insurance industry is no stranger to AI, but in 2025, AI is no longer just an experiment. It's the core of how policies are priced and processed. AI-powered underwriting. AI models can analyze thousands of data points in seconds, determining risk with greater accuracy. Insurers are using alternative data sources like social media and smart home devices to refine risk models. This means some customers may be penalized for risky behaviors before they even file a claim. Automated claims processing. AI can instantly assess accident damage using smartphone photos. Machine learning models predict fraudulent claims with 95% accuracy. Claims that once took weeks to process now take minutes. Blockchain for smart contracts. Insurers are experimenting with blockchain-based claims processing, which helps in reducing fraud and disputes. Peer-to-peer insurance models, where risk is shared among a decentralized network, are also emerging. In the United States, legal battles over claim denials are pushing insurers to become more transparent. States like Florida and Texas have implemented stricter consumer protection laws. Over in Europe, the AI Act will limit how AI can be used in underwriting to prevent unfair pricing. New EU regulations will force insurers to disclose how climate risks impact their investment portfolios. And in the Asia-Pacific region, governments are encouraging mergers to create stronger, more resilient insurers. Regulatory shifts will determine who thrives and who struggles in the industry. So, how are the biggest insurers adapting to these changes? AIG is cutting back on high-risk coverage due to climate-related losses. Sun Life Financial is raising premiums by 2% due to rising healthcare claims. Lancashire Holdings is absorbing $165 million in losses from recent disasters. Lemonade and Hippo are expanding AI-driven instant policy approval models. So what does all of this mean for you? Expect higher premiums in high-risk areas. AI-driven policies will make insurance more personalized, but stricter. Regulatory shifts will reshape consumer rights and policy pricing. Want more expert insights? Subscribe to the Insurance Report. Watch my next video on how AI is transforming insurance. Like and subscribe for weekly insurance insights.